Welcome back to AMS Spotlight, the podcast where we sit down with the professionals shaping the real estate and mortgage industries. Now, whether you're a loan officer, realtor, investor, industry partner, our goal's simple. Bring you conversations to help you stay informed, grow your business, and better serve your clients. I'm your host, Joe Dalio, and today we're joined by Michael Myers from FCM TPO. We're going to talk about what's happening in today's wholesale lending market, what separates lenders in a competitive environment, and how brokers can leverage products, technologies, and partnerships to close more loans. Michael, thanks for joining us today.
Thanks for having me, Joe.
Absolutely. Let's get to meet Mike. Tell us a little bit about yourself and your journey into the mortgage industry. Where did you start? How did you get here?
It really started with, after college, went to join one of those multi-level marketing that you're going to make a lot of money in, of course. And I sold pots and pans in China. And after that worked out great, ended up going to an employment agency and stumbled into Avco Financial Service, which is no longer in business, probably not for many years. And I met a fellow in the back who said, "You should be doing mortgages instead of this." And from there, I went to go work for a broker, and that broker led to another broker, which, as irony would have it, Michael Covery, the president and owner of AMS, was my mentor over at County Mortgage back in another life.
Oh,
So
really? I didn't even know that.
yeah, Michael showed me a lot of the early ropes, and I'm always grateful to him for it. And then made the move over into wholesale, and been doing that since probably the late '90s, mid to late '90s. So that makes me old.
That makes you experienced. I think that's the better way to put it. So you've obviously spent a ton of time working with mortgage brokers across our many different cycles. What would you say has changed? I usually ask people like, "Hey, where were you in 2008?" But what do you think's changed since in the past few years, specifically post-COVID?
Well, I think COVID changed almost everything, because we went from me being on the road for 4 days a week minimum, sometimes four and a half, to mostly sitting behind the desk, becoming a keyboard warrior, if you will, and people need answers on the spot rather than me knocking on their door. And I'm not one who usually makes. I usually don't call ahead because I used to have kind of like a milk route that I would do. Um, but nowadays, if more time, I'm going to tell you a good percentage of the time nobody's even in that office when I do go on the road, because I still do go on the road. But really, specifically nowadays, people would rather have an answer now than an out of office that says I'm on the road, more or less getting business or coming to meet you. They would rather have their answers right away. So for me, that's the biggest things that's changed, is that there's a lot more instant gratification rather than I'll get back to you as soon as I'm available.
Do you think a lot of people, since like the changes in people's businesses, how much it's gone up and down, do you think that's affected them negatively, like not coming into the office, not having that type of synergy with the team?
I do think there's a lack of synergy today. I personally, I liked it better, and this is probably old school talking, but I liked it better where people were in the office, including my office. I mean, we do have a center in both Utah and Tennessee, so we do have an office to report to, and a good amount of the people do report. But the good old days of the bonding experience, either at lunch or after work, or even if you have a problem you can bounce it off another processor or another underwriter, or go to your underwriting manager in person. I think that created a lot of bonds that I find that a lot of people are on an island today. And so I don't know if production has gone down as much as maybe um, mental health, and happiness. I think people are happier going to, I don't know about going to an office, but definitely making friends in the office once they're there.
Yeah, and I agree. I think a lot of people don't actually realize that. They're just like, "Oh, I want the flexibility of staying home," but like as somebody who doesn't have a family, like for me, it's just like, no, I would love to go into an office. I would love to work with a team. Like even if I didn't feel like it going into that day, I think it creates a certain mind shift. Like if I'm home, it's different. Like, but if I'm around people and it's high energy, I'm in the zone too. One of the branches at AMS, one of our bigger branches, I've gone in there the past, maybe two or three times in the past like 2 months, and the energy that that team has is just like, oh, I want to be a better salesman. I want to be a part of this. So I personally think it has affected us in a big way. But I was curious on your opinion as that, because you, as a wholesale lender, you see brokers from all over the place.
Mhm.
So
Yeah.
what do you think would be the one thing that brokers misunderstand about wholesale lenders behind the scenes?
Well, a lot of times they're smaller than you think. I know years ago, and it wasn't a company that I worked for, but there, and I don't remember the name of it right now, but when it came up about this big booming mortgage, you know, competitor of mine, they're like, oh, well, that's out in on an off road in Tennessee, and it's this small little up, and so it's not this big conglomerate sometimes that you think it is. Um, and the staffing, I find, the general opinion is that it's a big bureaucracy, and I find that these guys are so busy a lot of times because they staff up and then they get more business and then they need more staff. So you got a lot of people running around trying to get to loans as quick as they can. There's not a lot of downtime with these mortgage companies. So it's not meetings all day and it's not breaks all day. It's really that they're getting to it as fast as they can. So I think that might be one of the misconceptions that I hear out there.
Yeah. Yeah, and I'd be guilty of thinking that too, because when you have a file in and you don't hear from an underwriter in 5 hours, you're just like, oh my God, they're not working efficiently, they're not doing this. It's like, no, they're working with, 500 of you. Calm down. Uh,
Yeah.
so that leads me into FCM. So correct me if I'm wrong. They've been around since 1984.
Yes.
Okay.
Yes.
How does that
Wholesale is a lot more recent than that, but yes, they have it.
so how does that experience benefit broker partners today?
Well, the nice thing is the owner of our company, a fellow by the name of Corey Shelley, is the most approachable guy that I probably ever worked with. Um, so I feel that, and you feel this too with Michael over at AMS, who's ever at the top, the company it seems to come top down, of how accessible, nice experience, whatever it happens to be. If you have a nasty owner up front, a lot of times you have nasty customer service. If you have a nice guy up front or a knowledgeable guy up front, you're usually pleasant to work with and knowledgeable to work with. And I find that with First Colony FCM, because our leadership and our ownership is so approachable, knowledgeable too, but approachable and willing to work with people. Again, going back to, Corey, he actually found out that one of my brokers needed help with a fundraising effort. And he said to me, can I call him? Would you mind? And when he found out, when he was talking to him and it was about children, rather than just sponsoring a dinner, he actually said, do you think they want hoodies? That type of guy.
Yeah.
So I think you'll find dealing with the people over at First Colony, they're always pleasant. Again, they might not always get back to you as fast as you want because that's just part of the business. But I think it goes a long way to not only trying to be efficient and closing as quick as you can, but the other person on the other line doesn't have to make it feel like you're a burden. Because, truth be told, the broker community is not a burden. The broker community is the reason that we're here and we have jobs. Every time my phone rings or every time I get a text or an email, that's somebody trying to pay me. So my job should be, I really want to pick you up and I really want to talk to you. And the good news is I usually work with mostly people in the broker community that I like. So it's never usually adversarial or, you know, any kind of condescension, God forbid. So I guess my long-winded answer is I think First Colony helps me with that because that's my personality, and I was lucky enough to find somebody who has a similar personality.
Yeah, that's amazing. I also love that. I love what you said over there with the every time somebody's trying to call me, that's somebody trying to pay me. I think that's a mind shift that we all need to have. Because I think sometimes you will get like 50 different questions from clients and you're like, is this ever going anywhere? But like, even me, like my business has slowed a lot post COVID. And but I also have clients that for 4 years they haven't found a home and they're just starting to find homes now. So like if I just stopped responding, I might have not gotten half my salary this year.
Yeah, yeah, yeah.
So that leads me into my next question. So the elevator pitch. A broker's never submitted to FCM. What should they know?
So, I think with First Colony, we're from the top down, again, a very friendly place. But besides having my own team, so you're always dealing with the same people, and we are very accessible. We like to talk to the brokers rather than emails going back and forth constantly. We also have, very good pricing. Check the loan sifter yourself. A lot of times I'll send out loan sifter or arrive to show you that we're towards the top of that group. But in addition to that, we have a couple of niches. For example, my non-QM, I talk to the non-QM manager, Laura Pearson, more than I talk to my wife. And we have some niches like we don't source and season large deposits. We use the higher mid score of the broker, of the borrowers for the DSCR program. Bank statement programs, we're going to analyze those bank statements ahead of time so you know exactly, how much you're looking for in terms of income. And, our partners in terms of the AMCs, we're working with local AMCs. So we're going to give you a choice of local AMCs to work with, whether you're here in New Jersey, whether you're in California, Florida, or Colorado. So I do find that, the pricing, the good customer service, the good partners that are our vendors, I find that we're pretty easy to work with and we're very accessible. Much to my wife's chagrin, I very rarely take a vacation.
Yeah, well, if anybody in the mortgage space understands this, is even when you do take a vacation, you're probably working anyway. So
Yes,
at
you are.
least at least a little bit. So because you guys have a lot of products, and it sounds like it's not like there's a lot of people that be like, hey, we've got conventional and FHA, we're not really good at it. What product do you think? Because I'm like you're pretty good at everything. What product are you seeing has the most growth?
The most growth for us right now is probably the DSCR.
Okay.
Again, I find that we're usually priced pretty well. We're one of the few in New Jersey that can, as long as you're in an entity, we can give you up to a 5-year prepay if you'd like, which helps with pricing. Um, again, I had mentioned Laura Pearson, but the other underwriters are all very, very good at what they do. They're willing to pick up the phone, and I find that we don't overstep. So we close those loans pretty quickly. We do send out the LE and the CD, but that's only for the broker's benefit. We don't send it to the borrower. It doesn't need to be signed. So we can move those loans pretty quickly. And again, working with the local AMCs, they understand the market and they also understand that we need to get these things back. So knowing the market as well as they do, I do get good turn time on my appraisals even.
Nice.
So I see the DSCR as the biggest growth space if you ask me.
Now, would you say there's any products that you have that you feel are unutilized or something that's big that people just aren't using or marketing, I should say?
We do have on the FHA front, we do have a zero down, we call it a true zero program, where it's a first and a second. We give you the first at 96 and a half, and we do provide the second. So it's 100% LT combined loan to value, and we just follow the findings on those. So that goes down to a 620 score. And, the second mortgage is, it's a 10-year fixed, unforgivable.
Mhm.
And it's only 200 basis points over what the first mortgage is. So it's actually a program that I'm quite frankly, I'm surprised that, the couple that we've done have all gone very well. Um, and I'm a rep who, if I don't like the program, I'm not going to talk about it. This is a good program.
How's the pricing on that for because I know there's a lot of people that do the first and the seconds. I think unforgivable typically are the best because of the wild pricing differences, but is it close to something that they would get on a conventional or an FHA?
Yeah, yeah. It's not out of the box in terms of a massive increase in pricing. So, I do find that a lot of those borrowers are a lot less price sensitive.
Mhm.
But that said, it doesn't knock them out of the box, and you still have an LTV to worry about.
Yeah,
So, no, I find that they are very well priced.
cool. That's great. That's great. All right. So, what does an ideal broker partnership look like to you?
You know, in my opinion, that would be I respect your time, you respect mine. If you have a rush, if every loan is a rush, well, then we know it's not really a rush. But if you were to call me and say, Mike, tomorrow's a holiday, I need you to get this into docs today. It's really important to me that it closes Monday. I'm gonna understand that you don't usually ask that, and I'm gonna drop what I'm doing to make sure it gets done. But on your end, I think that you have to know that, hey, I'm asking you something that's unusual. So if it doesn't succeed, it's not the end of our relationship here. It's you do understand that the staff is working on as many loans as quick as they can. And I do my best to try to never say to somebody, hey, we're working on somebody else's loan and we'll get to you. My job is to make you feel that I'm going to get to your loan as quick as I possibly can, and I'm not going to use another broker partner as an excuse or another loan as an excuse. But I just think it's a mutual, honest, open relationship of, hey, I need a favor. Hey, I can't honor this favor, or hey, I will honor this favor because you don't ask me all the time.
Right. Yeah, no, that's good. I know there's a lot of brokers that do that. And like even as loan officers, we'll get the deals from the realtors. They're throwing it out everywhere they can't do, and you'll never hear from them again. And if you do, it's going to be an impossible deal where your reputation's like out the window. So I think the respect thing that you were saying, respecting each other's time, that's huge in any relationship that you have. Doesn't mean that I don't want difficult deals myself. I do, but
Yeah,
maybe think of me for some other stuff too.
you got it. It's not fair when I do hear, I know a couple of brokers who only get the bad deals. And you do have to leverage. I learned that early on, that if you're only taking the bad deals and you're only getting yelled at and the headaches, it's really not fair to you as a bit. That's not a partnership.
Yeah. So one of the things I like to do when I end these podcasts or we get near the end is I like to ask, what advice would you give for new loan officers getting into the field today?
You know, my advice would be to not let people wait. You do your best to answer their questions as quick as humanly possible, but don't lie. Um, you know, it's not a bad thing to say, hey, let me get back to you. I'm not sure on this. I've been doing this for, again, since the 90s, and I do it all the time. There's no ego in saying, I have to call you back and get this answer for you. So get the right answer. Don't lie. Be accessible. And, you know, I guess the last thing I would say is don't say bad things about your competitors. Um, whether you're trying to beat them because maybe they have one up on you or you don't like them personally. I find that the people who cast bad shadows on other people are not feeling good about themselves. So try not to do that.
I really like that. And that's something that I try to do myself too. You don't know somebody else's situation. You don't know another loan officer, but let me take a look at it and show you what I can do.
Right.
Um, well, Michael, thanks again for taking time to join us today. Now, everybody watching at home, if you found value in today's conversation, be sure to subscribe, follow, and share this episode with other mortgage and real estate professionals in your network. We're going to continue to bring you insights from people driving the industry forward, helping you stay ahead in an ever-changing market. I'm Joe Dalio, and we'll see you on the next episode of AMS Spotlight.